Good afternoon, and today is Monday, October 2nd, 2023. So it's the first trading day of October of this week, and also this is the very first trading week of October. So welcome to October. We have a sell-off month on September. Let's see how it's play out on this October. And just pay attention, October is one of the months very critical. We still don't know. We can, speculate, but if you look at the history or the crash or any big market move for the year, it's normally start in October. Our guess is that because October is we don't know what's the nuance behind the scene in the financial markets, but it's a transition from the last quarter of the year and then the first quarter of next year. So maybe a lot of fund manager, hedge fund, banking, money manager, they either trim their portfolio or they buy in their portfolio. They make adjustment for the end of the year and for next year. So that's really a lot of activity, and you can see that the major move makes in October. That's all we are speculating right now. But that's the phenomenon that we need to pay attention. A lot of things going on in October. That's all we want to bring to our conversation right here about the market activity right there. So we have the BISMI this week. This is not really a high impact news. It can be so-called medium impact news right there, released on Wednesday, October 4, which is 2 days from now. I mean, you can look and see what is, the PMI. So this, you can see that PMI is similar to CPI, right? But CPI must, it related to, the end consumer, right? Really consumer. And the PCI is related to production of the economy. They call Purchase Manager Index. Basically, it's a supply, right? In the economy, you have two forces that participate in the economy. One is supply, right, which is the one who producer stuff. They call it producer also, like a manufacturer, service provider, and the other one is consumer, is the one who consume the product and services. So it's the consumer. So that's how you see that the two index can correlate, and it reflects the health of the economies. So that's the idea right there. So we can pay attention to see how the market can react to this new on Wednesday. Okay, so that's an idea. Okay, let's take a look how to see how the SPY, open and close today, how it do it today, right? So it's closed at, so it lost. I confused right here, right? But if you look at the chart, you can see where our confusion come from. Basically, it says it dropped 12 cents, which is equivalent to 0.2%, right? That's an idea. Okay. Now let's look at where's my 1 minute time frame? Okay, here's our 1 minute time frame, okay? And we look at here, right? It also say that, according to Thinkorswim platform, the SPY also dropped, negative 17 cent, which is, this number right here 12 cents, but for thinkers we may say 17 cents. Maybe it include the aftermarket. That could be the reason that discrepancy right there, and the percent is similar, right? 0.04 and this is 0. The other one is 0.03 and the one is 0.4. However, if you look at the chart, you see that it opened at 9:30, right, which is 426.62. It's close above that, so it should be an up close candle. So I don't know why it say that, it's dropped. And our reason is correct. If you look at the daily time frame, in this case we call D1 profile, which is just 1 day time frame right there. We have other time frame, right? We have 1 minute time frame, 1 minute time frame, 15 minutes time frame, and 5 minute time frame, and this 1 hour time frame, 4 hour time frame, and this D1 is 1 day time frame. We also M1, which is 1 month time frame, and then we have V1, which is 1 week time frame. Okay, so go back here. We see that for the 1 day time frame, it showed up close candle, which is correct. I don't know why the other website, says close. So that's the mystery that, or the discrepancy that we're gonna find out later. Okay, but if you look at this, you can see that it is bullish, right? You can consider tomorrow, right? If it open above this close candle, and it take out a high, then I think we can go long, right? We'll go back to this later, because I think we apply we apply a turtle setup that gonna give us a good idea right there. Okay, let's go back to what our observed for the quality run, price action today, right? So basically we saw that the prior day was taken, right? The prior day low at 425.91, it was taken and create a new low, just 6 cents below that. So it's 425.95 right there. And the prior week is close at 427. Okay, and we saw that the London high taken Asian high right there, and then after that it seek the sell side liquidity and take out the prior day low. And as soon as it take out the prior day low, is make a retracement, which is going up. And Monday we see that start at the week rate, it opened at 426.62, which is above below the prior week close, and it closed 3 cents below that. So let's see if tomorrow is above it level, then we can go long. Okay, that's an idea. Okay, so today we try to incorporate the total sub setup that we just learned over the weekend. Okay, let's look real quick on what is total sub idea. Okay, so let's see. Okay, so for the total sub setup, right? We all the weekend we read this book. Right, this is the book that we read right here. So it's called Strict Smart, and it's by Lawrence, also called Laurie Connors, and Linda Prefaswasky. And if you follow the market wizard by Jack Swagger. She is one of the market researcher on his second book called New Market Research. I think is the book is published in 1995. I believe it's 1995, something like that. Let me open the book and double check real quick. Yeah, 1995. So this book, 1995. So I mean, it's about 20 years ago. Actually, it's about 18 years ago, for that matter. Is that 18 years ago? No, 23 minus 95. Yeah, 18. Right, 18 years ago. That sounds like yesterday, but it's a long time ago. That means, any setup that you see is there. It's a lot of people discovered a long time ago. Nothing new at all. So that's an idea. So look at how this setup, the criteria of this setup. Basically, this setup is the 4 breakout. So they play again the 4 breakout. The whole idea that we need to monitor the low or the high of the last 20, in this case like a 20-day low, right? But if you try on different time frame, the day can be 20-minute low, basically 20 candle low, right? The last 20 candle. In this candle can be a daily candle. It can be 15 minutes candle, 5 minutes candle, 1 minute candle, or 4-hour candle, or 1 hour candle. So that's an idea. So as soon as we identify the high or low at the last 20 candle, then we start have a setup, right? And pay attention to the second condition, right? Basically, the last 20 low must be occur at least 4 candle. I mean, for trading section in this case is 4 candle. It's very important. So basically, this is gonna form you a what? It's gonna form you a double top right there. Is that an idea? Right, the double top. The reason why it's a double top, when you go to the charts, we will show you the reason why. So after the market fall below that, this for buy, right? Then we buy the 5 tick below pretty low, and the stop loss is good for only the day. So let's I mean, you can read more about this later. But if you look at the website, at this website, it can give you a very good idea. I mean, that's similar, the same thing in the books right there. Sell is reverse, so 4 important right there. So basically, 6 criteria. First, to identify the turtle soup setup, either long or short, or buy or sell right there. Okay, let's take a look at our, today we saw the setup perform right around here, around this level right here, 930, and then it come back to take the sell liquidity and and immediately is reverse or is retracement. That means right here it's gonna be the 4 breakout right here. Anyone who thought that you're gonna break this level, gonna go in and short it, chase it, short it, we got stop out immediately. You see, that's the reason why it's very explosive. And this is a very high quality or high property setup that we know for sure we're gonna take out this buy side liquidity. The reason for that, because you see right here, it create a equal high. Whenever you see the equal high, you know that it's is the liquidity trap right there. In this case, I mean, for both equal high and equal low, right? It's liquidity trap. But in this case, it's the equal high, so it's the buy side liquidity trap right there. Look at the 5-minute time frame, you can see more clear on this than on the 1 minute. Okay, let me pull the 5-minute time frame. Okay, so here on the time frame, you can see right here, that is the equal high right there. So you know that it trapped the buy side liquidity. So as soon as you saw it take the sell side liquidity right there, you know like gonna take that buy side. So that's where we're gonna do a quick, quick scarfing trade right there, because this is this is a very typical, fall breakout setup. In this case, they call it turtle soup, right? And you see the logic behind that is very accurate. By the way, let's look at the 1 minute time frame. Okay, so right here, that's our right up, right? So let's look at what we do at that real-time moment right there. Okay, so remember, we have to I put a note right here, right? I show you the stretch mark by Laurie Connors and Linda Bravers Rasky, turtle sub setup. So the turtle sub in this case, a long setup, is a fall breakout right there. And we pay attention to the sell side liquidity at 9:30 right there, right? And we know that the candle number 2 right here, right? We count back to the last 20, right? According to the rule right here, right? The last 20 day or 20 candle in this case, we trade at 1 minute candle, so we trade back around 20 or so, right? Okay, let's go back to the screenshot that we take. Okay, so we go back, right? We trace right there, and you see the phenomenon right there. As soon as it take the buy side of this guy, right, at 9:30, it rate by the candle at 9:52, right? This candle 9:53, then one candle before that is 9:52. As soon as you saw that liquidity rate and this candle close above that low, so it gives you the signal that qualify the turtle setup right there. But let me see. But this condition, it did not make right there. It did not create for at least 4 candle earlier. It did not fall out. I mean, this one create right there, and then the next one is go right there. So if you want, we go in right here. Basically, they go in here. Yeah. So let's go back to that. Right. Let's keep this. Yeah, that's a very important right here. But if you look, you don't see that. A curve 4. We don't see that. But maybe on the next setup, we can see. In this setup, you can see that. But in this setup, you don't see that. But that means you have to take another version of turtle soup right there. But anyway, to look at the setup again. We go back to that condition later. Okay, so right here we take a little bit but it's a very low risk, right? Even though that condition they put right there is very important. But in this case, we see it's play out well. So it should be another modify that we need to do. Maybe we don't go all in if that condition does not match, right? Let's say this condition is not met, then we don't go all in. We just do a small side, right? In this case, we do small side right here. Okay, let's look at the note that we have. Okay, so as soon as we see that this candle take the sell side liquidity of the 930 candle, then we should have our order ready, and it close above that. Then the next candle, when it open above that low, then we know for sure, right? Take a long entry as soon as the candle number one right here open above the sell side at 930. Then we go in and we put a stop loss 5 cents below the 426.20, which is this the low of this candle, I believe. Yeah, right there, the low of the candle. And target is the most recent swing high. It did, and it hit right there, you see. So that is our turtle sub. In this case, we skip this. You know why? Why we skip that? Because this swing high is not for, at least for, you know, 4 candle from this candle. It's just one candle. Basically, they want that, you know, be a double bottom. So they want another retest around here, so you can have the total sub set up. That's an idea right there. So, but in this case, it still play out good. It's not a 100% total setup requirement, but we can see it's play out good. Later on, we can see another setup that perfect fix the total sub setup right there. You understand that why it mixed this requirement, right? This one is not there. So this one is just one candle, you know, happen after this. Basically, they want another candle, right? Another candle go for at least 4 candle, you know, after this candle. So basically, 1, 2, 3, 4. Let's say this candle, all this candle gonna make what? Make another low right here. That's an idea. So you have a double chop right there, and that will be a very high quality setup. But anyway, let's move on to our note right here. So yeah, we set up the target, right? And the target is the buy side liquidity drop at equal high. We already mentioned that, right? We already allude to that in our yeah, right here. So you see at 10:03, or you can exit from here. So it hit only you stay in the trade only 13 minutes and look how much you risk. You risk only 23 cents and you gain $1.50. It's like 1 to 4, 1 to 5 risk reward ratio right there, right? It's very low risk. Okay, so our thesis, our assumption that on the Thursday form on Monday, normally form on Monday. You know why? Because Monday is usually a range day, but you don't want to make any move. The reason why the Monday is a range day because the first day of the week, you know, people try to test the water, right? They're not going to make any commitment. Market maker or any market participant, right? They're not gonna make a huge decision on Monday. Everyone, you know, want to see how the market play out after a weekend, right? So that's usually the psychology aspect of that. And when it run when the market is run day, then you can see that a lot of fall breakout gonna take place. surely for a breakout. That's the reason why the turtle soup setup is very effective, which is the opposite of the breakout trade. So how do we, approve or disprove our thesis? We're gonna collect the data from now on. We're gonna collect the data and statistics on Monday. You see any turtle soup setup for breakout up at what time, and we go from there, right? Today we know that it happened for a long setup. It happened at what time it happened? No, this, yeah, 9:53. So pay attention for the low, right, or the high, or in this case it's gonna be, yeah, the high and the low at 9:40. I mean 9:30, and then the retest or the rate at 9:53. Okay, so we need to set entry time, right, 09:53, and another entry we need to say a swing low. I mean swing low, right? I don't want to put the SL, it's like a stop loss, but let us swing low 09:30 right there. That's the level that we need to pay attention. Swing low, or you, in other words, or sell agree, pay attention of that, because at this time it's gonna take out at 09:53. It's gonna take out the sell side agree from this candle. So that's the thing that we need to pay attention. So how are we gonna do that? Yeah, gonna do. Okay, another trade setup we saw is the short setup at 11:30. It is a very perfect setup. Let's take a look right here. So I haven't taken a screenshot of this, but the same idea. And this one is perfect, fit all the criteria. You remember the first setup? This one does not fit. It failed to meet this requirement, right? It failed to meet this requirement. However, this trade, it meet all 6 requirements for the especially the first trade, right? First trade is very critical for the setup to play out right here. The first trade right there, right? That's the first trade condition. The rest is just how you execute a trade, but the first trade condition is critical. So this trade make all 3 of that. So look at that, how beautiful the setup become, right? So at this, and you see the time also, 10:30 is the perfect time for turtle soup forming. I remember I read some Twitter, and the guy said that pay attention at 9:30, 10:30, and 11:30. It will give us some critical level to see how the turtle soup, play now. And look at that. All right, look how it meet the second requirement right there. Okay, so for the last 20 candle, we see this is the most recent swing high, right? As 2760 right here. No, this is the last from here, but right here, you see we mark this at the very first candle, so we can look back, right? So right here, the high of this candle is 420.60, right? This candle, I think we're now out of time, so I'll try to wrap up real quick. So we look back and we see this swing high, right? The high is the last 20 candles. So that's the first requirement. The second requirement that this swing high have to be at least 4 candle, right? This is, we have more than 4 candle. We have 8 between this one and this candle is about 6, 7 or 8 candle there. So it meets the second requirement. This is the last intermediate swing high right here, and this one take out that swing high. But you know what happened? It's a rate. In this case, you can say it's just a bicyclic rate right there. It opened below this high, and it's close below this high. So it gives you the strong signal that this is just a bicyclic rate, and the algo gonna do switch from bicyclicity seeking to cell cyclicity seeking. Basically switch from buy program to sell program right there. And another beautiful one you can see right here, it shows you, it leaves behind the signature. Basically it tells you where it's going to right there. It gives you the favor gap, which is, you know, ICT concept right there. And right here it's a retest. So if you miss the entry right here, then right here you have a second entry. That's the beautiful one right there. You see that? I mean, you can go home and rewatch the video again. I got to go now, or which way I don't have a I cannot do the write up right now, but later on I can do. But if you rewatch the video, you know what I'm talking about right now. I kind of rush right now. I speak real fast right now. I run out of time. So you remember the idea, right? So that's the idea of the turtle soup right there. It meet requirement, right? Last swing high for last 20 candle right there, and that swing high is at least 4 sections from the previous swing high right here, which is 47 right here. And after that, you see if it open below of this swing high, then you go in, you short right there. That's the requirement right here. It meet the first requirement, second requirement. You see, if fall below, and this is for the buy reverses, right? It open above the prior swing low, right? So as you see that is the swing high. If it open below that, this swing high right here, it open below that. Or I mean, in this case, you can in this case, hold on, the last swing right here, that where it's broke, the 47. So as soon that you see this, it open below this 47, you have a setup right there. Not this, swing high, okay? The prior swing high, that this one is straight, that's outside. So as soon that you saw it's open below this level, then you go in short right away at this candle. However, if you miss that, then you still have the IC concept entry right here, which is auto block, Fibro gap, retest. Yeah, a lot of us, we're gonna miss it because we say, wow, this Fibro gap is too small and the displacement is not real big at all. Then we kind of hesitant to go here, and I can see that, I can see logic. But if you confluent or you incorporate the ICT concept, the setup with the total soup, you are completely have a very powerful remedy right here, a very powerful formula right here. That's what I'm trying to say right there. But anyway, I gotta go, and thank you for your time and interest. Talk to you later. Bye for now.